Once again, it is that time of year when the 13F filings are made public and provide us with a glimpse inside the investment portfolios of some of the most well-known investors in the world. Among them, Warren Buffett's filings have a history of drawing a substantial amount of interest, and at this particular juncture, there is some fascinating activity to analyze. In this video, we'll be discussing the sale of one of Warren Buffett's largest stocks, Activision Blizzard's stake in its historical and current context. The name Warren Buffett carries an extraordinary amount of weight in the world of investment. His decisions are closely monitored and frequently imitated since he is so well known for his value investing theory and his ability to recognize and invest in firms that have a strong foundation. The acquisition of a share in Activision Blizzard, a prominent participant in the video game business, was one of the most notable decisions he has made in the most recent years. In the first quarter of 2022, Microsoft made public its plan to acquire Activision Blizzard, which aroused Warren Buffett's interest in the gaming company. This announcement was connected to Microsoft's plan to enhance its Xbox business by acquiring well-known video game titles. Buffett saw this as a workout or a speculative arbitrage play because he was aware of the possible financial rewards that could result from the acquisition. In essence, he was not purchasing Activision Blizzard because of its essential business operations. Rather, he was doing it as a prospective source of profit in the event that Microsoft was successful in its takeover attempt. In their proposal, Microsoft offered to buy Activision Blizzard shares at a price of $95 per share, which represented an upside of 17% compared to the share price that was currently in effect. This presented Buffett with a significant possibility to make money if the transaction went through, regardless of how well Activision Blizzard did as a business. As a direct consequence of this, he made a large investment in the company and now owns approximately 9.5% of its total shares. The sale of Activision Blizzard shares brings about a change in the wind. A quick trip into the present reveals that the scenario has developed further. In both the United States and the United Kingdom, regulatory authorities raised objections to Microsoft's proposed acquisition of Activision Blizzard. The discussion on whether or not the transaction is possible has continued, which has created uncertainty in the market. In the midst of all of this uncertainty, Warren Buffett has taken an unexpected step, as revealed in his most recent 13F filing. He has completely divested himself of his holdings in Activision Blizzard. Even while the news of this sale would come as a surprise to some people, there were hints that Buffett might be thinking about making such a move. In an earlier statement, he admitted the difficulty of the transaction and the possibility that it might be thwarted by the authorities in charge of regulatory compliance. He underlined that in the world of investment, not all projected results actually come to fruition, and this idea appeared to inspire his choice to abandon the position he was in. It's crucial to highlight that Warren Buffett's recent sale of all his shares in Activision Blizzard holds an interesting nuance. While he personally divested his holdings, the broader conglomerate he oversees, Berkshire Hathaway, still maintains fractional ownership of Activision Blizzard shares. This differentiation arises from the structure of Berkshire Hathaway's investment strategy, which involves a collaborative effort by various investment professionals, including notables like Todd Combs and Ted Weschler. Although Buffett has completely offloaded his personal stake, it's important to note that Berkshire Hathaway's investment approach is a collective endeavor. While Buffett is widely known for his investment prowess and decision-making, he's not the sole driver of the investment choices within the conglomerate. Combs and Weschler, prominent figures within Berkshire Hathaway's investment team, play instrumental roles in shaping the portfolio's composition. The decision to both initiate and manage investments is a collaborative process within Berkshire Hathaway. Combs and Weschler have substantial influence over a segment of the conglomerate's portfolio. This includes not only the choice to invest in specific companies, but also the ongoing management decisions concerning those investments. In the case of Activision Blizzard, while Buffett may have been involved in the initial decision to invest, the subsequent management and potential divestment of the holdings could have been influenced by Combs, Weschler, or other professionals on the investment team. This underscores the depth of expertise and diversity of perspectives that drive Berkshire Hathaway's investment strategy. While Warren Buffett personally chose to sell all his shares in Activision Blizzard, it's important to recognize that Berkshire Hathaway's investment entity extends beyond just his individual decisions. The conglomerate's investment team, led by figures like Todd Combs and Ted Weschler, collectively shapes the portfolio's composition and guides decisions related to investments. This collaborative approach highlights the intricate dynamics at play within Berkshire Hathaway's investment strategy and emphasizes that the conglomerate's involvement with Activision Blizzard shares remains even after Buffett's personal sale. The implications, as well as the key takeaways. The fact that Warren Buffett has chosen to sell his share of Activision Blizzard carries with it a number of ramifications and takeaways. In the first place, it highlights his commitment to risk management and steering clear of uncertainty. Buffett's decision to withdraw from the position implies that he likes to steer clear of investments when the outcome remains uncertain. This is despite the fact that the market's mood regarding the Microsoft-Activision merger has grown more optimistic in recent days. The second benefit of this action is that it acts as a reminder of Buffett's investment philosophy. He is well known for making investments in businesses that he comprehends thoroughly and that he thinks have inherent worth. His early interest in Activision Blizzard was not connected to the company's operations. Rather, it was focused on the possible advantages that could be made through the acquisition. This demonstrates the practical approach he takes to investing, concentrating his efforts on areas where he believes there is the highest potential for profits. The nature of the investment landscape is constantly shifting. Even for seasoned investors like Warren Buffett, factors such as market conditions, regulatory hurdles, and events at corporations can have a substantial impact on investing decisions. The choice to sell a stake indicates that no investment is immune to changing conditions, which reinforces the need to remain watchful and adaptable. Changes made to a diversified portfolio. In addition to the drama surrounding Activision Blizzard, Buffett's 13F filing sheds light on a number of other noteworthy portfolio adjustments. Among these are the reduction of Berkshire Hathaway's position in Chevron by 7%, the continuation of the accumulation of shares in Occidental Petroleum, and the adjustment of positions in a variety of other firms. Berkshire Hathaway's recent shifts in its investment portfolio, though noteworthy, underscore the diversity and breadth of its investment holdings. While certain changes might capture greater public interest, their cumulative impact on the conglomerate's overall assets remains relatively modest. This underscores the fact that Warren Buffett's investment decisions are typically guided by meticulous examination, with a keen focus on the potential of each investment to generate long-term value. The attention-grabbing alterations might overshadow the broader context, where Buffett's strategy prioritizes sustained growth and stability. By strategically adjusting the portfolio, Buffett demonstrates a commitment to adapt to market trends and capitalize on emerging opportunities. It's essential to interpret these modifications within the context of his overarching philosophy, emphasizing prudent evaluation and patient investment. In essence, while individual changes might make headlines, the collective outcome on Berkshire Hathaway's wealth showcases the wisdom of Buffett's measured and thoughtful approach, which centers on positioning the conglomerate for consistent success over extended periods. The preeminence of Apple, on a closing note. Buffett's stakes in Apple have swelled to an astounding percentage of Berkshire Hathaway's U.S. portfolio, which is now over 50%. This investment strategy is more long-term. In spite of the fact that this may give rise to worries about excessive concentration, it is essential to keep in mind that Berkshire Hathaway's business comprises a great deal more than just its stock holdings. The corporation is involved in a wide variety of business activities, ranging from manufacturing and transportation to manufacturing and insurance. The significant holdings in Apple are only one aspect of the overall picture. In conclusion, Warren Buffett's choice to sell his interest in Activision Blizzard illustrates his dedication to risk management, his value-focused attitude, and his flexibility to adjust to changing circumstances. Even if people pay a lot of attention to his changes within the portfolio, that is only one component of the multidimensional strategy he takes to invest. As is customary, the decisions made by the Oracle of Omaha give investors of all experience levels valuable insights and lessons. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.